So I found a beautiful trade. Let's see how we can trade the current squeeze that we found on Ethereum and Bitcoin. Here it is. We're on the 4 hour. What I like to do is open a multi-screen. I use a 5 minute, 15 minute, whatever lower time frame. We got a 1 hour, 4 hour, and then we have the Vanguard Total Stock Market ETF. I love using this indicator. The Stackcoin works great with it as well. And it'll show you, because if the stock market goes up, everything, it allows other assets like crypto to go up as well. But if it dumps, everything dumps, even Bitcoin, and then Bitcoin dumps, everything else dumps, and it's this cascade sort of effect. But we're approaching this resistance right here. It's a 4 hour resistance on basically the entire stock market. So that's going to be interesting. I hope it can break through. I'm expecting it to break through. It's a giant, if you like technical patterns, right? A giant W pattern. I mean, price targets quite high, which, you know, you'd have another couple points to go up, if that means anything to you. So that's why I keep it here all the time, because if the stock market dumps, everything dumps. Always keep an eye on it. Anyways, we got the 4 hour, we got the beautiful squeeze. Here we have the Fibonacci levels we placed. I'll show you where we placed them. But they're being respected very nicely. Here on the 1 hour, this is Ethereum, of course, we got this downward trend. This trend has been, it's been respected very well, so I don't know what's going to happen here. I actually would have shorted it if I would have opened my account earlier over the weekend. I decided not to trade over Christmas, especially over the weekends. I tend not to do it, but especially over Christmas. It's time to relax. Merry Christmas to everybody. I would have traded here. Let's see how I would have done it. I would have probably set my entry somewhere. I usually do it before any of these resistances. I probably would have placed it around here. There or up here, right at this resistance. Well, no, the downward sloping one. Probably here. Would have entered with 2 times leverage or so, then scaled it up if it looked like it was confirming. So I might have missed it. I might have still would have missed this. I always use limit orders. Don't ever, again, use market if you want. I like to use limit. The market tends to revisit the price points. Even though you think you might not have a chance to get in, usually you do. And you'll save a lot of money doing that. But if I would have entered anywhere here, even here, I would have placed my stop right about here. Right there. Right above, right here. Entry here, underneath here. I would have got stopped out here because you'll have this supporting you and both of these trend lines, right? These are hourly resistances. They're not bad. I would have looked upwards in time. See, the 4 hour resistance is exactly in the same place about, right? So there's a lot of resistance up there. This is why it's having trouble breaking through. And that's how you use these resistances to place stop losses. That's what I would have done right now. I'm going to wait to see what happens. But if it retraces, I'm going to have to wait until it hits this point down here. Right here. Right, I'm going to place a limit buy right here along. And then the stop loss is going to be behind this right here. Probably around, let me see what that is. What's that percentage? 33. Depending on how far my stop loss is, that's what dictates my leverage. I would probably, again, I would look through the lower time frames. So I'd do this and I'd open it up here, I'd go down lower time frames and see where these resistances are and try to get as many of these resistances stacked in front, the supports if I'm going to long or resistances if I'm going to short. I want as many of them as possible stacked in front of my stop loss, right? So, and the higher time frames, the better. So if you're around a high time frame, definitely play around with it. These are great opportunities to long and place a stop right across from it, because chances are it's going to hold. That's the basic mantra of how I trade in general. Right, I'm not mostly going to do anything right now. I missed this right here. This one right here, I missed this. This one right here. That was a great opportunity, especially because you have sort of a distribution, 3 tridents, right? Whenever you have 3 thrusts up, you can expect a big dump like this. Now this is an even grander one. If this is a distribution, by the way, expect it to go down to here. Like below, probably around here, right? And if you look at here, this very well might be a distribution, to be honest with you. Creating sort of a fake out, perhaps. Dumping down here, hitting this little imbalance, and then faking all the way back up, right? Because these Keltner channel Bollinger Band squeezers, they love to fake out. This could be very well perhaps one of those distributions. That's what I'd be looking forward to. This was a great opportunity here. If it goes back up here, I'm going to enter again. Place my stop loss right above it. It's a very good trade because there's very little risk to lose, and there's a great upside, right? Not only from this potential distribution, but also all these resistances keeping your stop loss safe. So that's kind of what I'm thinking so far. It's still very murky waters. I don't know what's going to happen. No one does, trust me. There's squeezes, volatility squeezes everywhere. Something big is going to happen very soon. We're still in a downtrend, right? Lower, we need to regain. We got a higher low here, but we need to regain this higher high to be in an uptrend. So I'm mostly shorting. That's what I do. You want to increase your edge. Do whatever it takes for you to have high enough chances to win more than you lose. Keep tight stop losses. And that's how you maintain money, not only win money. Anybody can win a trade. Most people that start trading are very successful at the beginning because they don't understand the dangers in trading, and most traders get in during bull markets and they love to long. No one gets into trading wanting to short. It's very rare. So you'll create this perfect environment where people will win a lot of money, they won't use stop losses, and then they'll get liquidated and wrecked. Then that fear creeps in and their trading is forever altered. You need that same mind state you had when you started, when you were fearless, but you have to understand the risks and mitigate them as much as possible and understand that you're going to lose. You're going to lose many times, but you're going to win more if you stay consistent. So figure out, everything I'm telling you here is to maintain consistency. That's why I start on general trends. If the trend is down, I short. That's it. If I find a great bounce off point like this, right? We have a daily bounce, I'm for sure going to long that. If it hits up here, I'm going to short that for sure. Daily resistances or supports, I act on every time. But other than that, there's really nothing you need to be very careful in order to maintain the wealth you have and not scare yourself, not get bogged down, wrecked, mentally exhausted from losing, revenge trading, kamikaze trading. We'll talk all about this, but this is how you use Stackcoin 1. We'll talk more about Stackcoin 2 and everything as well in the upcoming. I just thought that was a great little squeeze to show you the beauty of it. Something big is going to happen. Remember, I said it. If it bounces down here, well, if it goes down, we're going to revisit some lower levels anyways. Merry Christmas.